Check, check. Check one. Check two. Welcome aboard, traders, to a new session, a new version of the stream on the X platform. This time, wanted to try another medium of sharing information from our technical analysis with harmonic ratios. For those who are new, welcome aboard. For those who are members, thank you for joining once again. We had our stream in the room yesterday. And after today's meeting from the Jackson Hole, nearly a year now from the last one in September or August last year, we have now new information that I would like to, of course, make some comments, because the data that we have been reading since last year are apparently being respected, right? Constantly, these readings have been respected, and therefore, we're going to try to portray the new information, the new variables within the data points, as the Fairman, Jerome Powell, suggested that they are so data dependent. We have been respecting our data, and one of the tenets of trading psychology is discipline. Why discipline come here into place? Because discipline requires the ability to follow our strategy, and our strategy has been reading harmonic ratios and respecting the technicals from the legends of the past that did already the research for us. Therefore, we're not reinventing the wheel, other than respecting their work, following their work over and over, as they have been respecting for over 100 years ago. Okay, what do we have in the new information? What do we have now currently within this screen that you guys can observe on your end? These represent the Fed funds. For those unfamiliar, we were tracking these data points from last year on July 16, where we were portraying, or we were projecting, that if the same cyclical rhythm, right, based on the sine waves, applying this the frequency of the market rhythm, once again, if this theory that follows from the 1950s, I believe, or 1970s, if the same rhythm was going to be respected, then we will likely enter the peak on interest rate, okay? Where, by the way, we were at the 5.55% or 5.25% last year, July. Near the peak at those levels, we were projecting that a period of flatness was going to occur next if the same cyclical rhythm was going to be respected once again. The cyclical rhythm here illustrated within the sine waves, okay? The cycle highs on the top, cycle bottom are the lows, okay? The only application that we use here, the sine waves, is only to identify the potential cycle highs and lows based on time, okay? And also we have the time axis from last year. This chart corresponds once again from July 16 of 2023, where if the period of flatness, the white line here, was going to be repeated, we're going to have a pause within the interest rate for nearly a year, which has been the case. A little over a year now. This chart corresponds from July. We're now in August, July of 2023, by the way, July 16. Therefore, we're now a little over a year, okay? And what we're seeing now on the financial media is the topic on rate cuts. Can this be the case within the price action or within the readings on the cyclical rhythm? And what implication may this take within the equities market and Bitcoin? Let's dive into a chart. Again, everyone, thank you for being here. This is our first stream on X. If you guys want to follow our work, you can visit marble6.com. All the reading, all the information will lead you to our room if you're interested into this type of analysis, okay? Now, this one was a chart that we were making the prediction last year, right? And what the implication of these potential rate cuts would imply within the equities market. Many are expecting that interest rate will potentially propel the prices higher within the equities market. However, historically speaking, each time the Fed started to cut rate, this often implies periods of risk. And now that we are here, my friends, after identifying the cycle low back in 2022. Once again, we want to talk here with facts, okay? Also following the chart, we also chart the inflation rate. I know it can be a joke, correct? But we have been also tracking the data points within the inflation rate, also projecting that a decrease within the inflation rate was going to head towards the 0.618 within this harmonic framework around the 3% mark, right? And what we have recently experienced was indeed this lower reading at the 2.90, okay? Again, another astonishing reading here being respected so far, okay? And also, if we move now into the current information within the cyclical rhythm for the Fed funds, we're going to be moving into the Fed funds, of course, inflation rate, and what can this imply for the S&P 500, which is our next chart, okay? After this reading were respected, okay, let's move back here very briefly on the current readings that we have for the Fed funds so you guys can follow along. So the readings that you guys can observe on the chart was from July 16 of 2023, okay? This is very important because our interpretation of the data has been respected so far, and the implication of the readings that we are getting so far still implies for the periods of risk for 2025 and 2026, which, by the way, we were favoring the upward move at the cycle lows, while other friends and people out there were suggesting their family to get out of the market, basically at the market bottom, right? So now that we are 60% higher from that time of October 2022, okay, we need to have the new reading within the price action. What do we have here? The Fed funds, July 16, 2023. Where we are currently. Once again, let's go back here. Let's go back here very briefly to have the reading. That line was within the 5.25% on the interest rate for the period of flatness, meaning a pause within interest rate without the Fed hiking any new basis points, okay? So now that we are here, the current information, did we indeed present it? Did we indeed print those period of flatness that was expected for up until July of this year, or I'm sorry, August of 2024. And now, what are we hearing in the news? Potential rate cuts in September. What a coincidence, right? Now, moving into the S&P 500, where are we currently? The S&P 500, as I mentioned before, many were suggesting their families to get out of the market here at the market bottom, right? What occurred? A 60%, a little over 60%, 63% to be precise, if I recall correctly, from that point where projections were made by other analysts out there, or pseudo traders, I should say. We have now a 60% move since those lows, right? By the way, our projections for this index was also, and this is not to say that we were right, we were wrong, we're traders, we're only trying to capitalize on the opportunities that the market present to us, therefore we can become profitable, right? That is the ultimate game for us traders. So at that point in time, this is the same suggestion for the S&P 500, that if the market lows from 2022 was indeed going to be respected, okay, we then made a projection to where? To potentially the 6,000 points on the S&P 500, which, by the way, what a coincidence that we are now seeing other, including Wall Street analysts also making their projections towards the 6,000 region. What a coincidence. What we normally want to observe here is if they can present those arguments at the bottom, right? This is a chart from December 5th of 2022. If they can present those arguments here at the bottom without spreading fear, that will be something that I would respect. Why? Because if you have a following, in this case, you can mislead others and your words can impact other people believing that you understand the market, which is not the case in many commentators out there, okay? However, here what we do is an interpretation of the data. Interpretation of the market information is very crucial, my friends, because this can mislead others when it comes to investing. And by the way, none of these represent financial advice, but rather an interpretation of the technical information for educational purposes only. And also, to prove my readings, on my personal experience, our thesis of the data, as we are also data dependent, was respected as of now, or is being respected as of now, okay? The other reading that I presented before, after the main projection from December, from the lows, 4,000, 3,500 region, towards the 6,000 region, was that we were going to move accordingly into price segments. The first projection, also, if you guys recall, Mike Wilson being extremely bearish here at the bottom, right? However, we navigated their portfolio yesterday, knowing or discovering that Morgan Stanley was in fact actually loading within financials, the XLF, within the sector. They were loading nearly 30% of their portfolio on the XLF. And why would you be loading your portfolio, 30% of your asset allocation, when you're projecting the market will go lower, right? The composite operator come here into place, my friends, right? Spreading fear while loading their backs and make the public scared of their projections. So now that we are having a new information, where are we currently within the price action on the S&P 500? The main projection that we haven't yet achieved, okay, for those unfamiliar, we have been tracking these and trading along the way also. We have been projecting the 6,000 region from the lows, right? This is a data point here on the S&P 500, suggesting that each period, the price near the 200 moving average, each time we have an increase in price, right? Basically at each lows. And the last time we have experienced one of these was at the cycle low, September of 2022, basically nearly 2 years now. Which, by the way, for those unfamiliar, bull markets, the average duration of bull markets is around 4 years, roughly 3 years and 8 months, roughly. And what are we heading now into? The periods of risk of 2025 and 2026 that we have been projecting since 2023. We were bull during 2022, or the last part of 2022 was personally also bullish within the equities market all the entire time of 2023. Now I'm being more cautious. Why we're being cautious? Because we have recently executed also a short position on the S&P at the 5,700 region, which, by the way, this is another projection, the CD, for those harmonic pattern traders who follow our work and has been following our work. This CD projection is where we are currently on the price action for the equities, or the US equities, the S&P 500. Which, if we go back here to the current information, once again on the S&P 500, reconstructing prior events that can take place on future price development, coincidentally one of our theme for forensic analytics, this is indeed where we are now. And this is why we executed the short last month, or July, June, we were presenting the arguments for a potential decline, correct? And what occurred? Indeed, a 10%, nearly 10% decline for that time. This doesn't mean that we were not bullish the entire uptrend, okay? We were cognizant that the potential lows and higher lows were constructing, implying continuation of the prevailing trend that has been upwards, as all the legends presented before. The consecutive higher highs, and consecutive higher lows imply the uptrend, right? Within the bullish conditions in a primary trend. Also applying Charles Dow here. So now that we are here, we have other information also presented in the room. If you guys are interested in these readings, you guys are welcome to join. Of course, this is all speculation. None of these, once again, represent financial advice, but rather an interpretation of the technical information. Now that we have the first decline, the first turbulences within the price action on the S&P 500 after the completion point of this projected move, we're tracking other variables to see if we're going to find another rejection here, head much lower, or if the next projection of our previous ABCD reciprocal, the major one that we presented nearly 2 years ago, almost, right? In December will be 2 years. If this is indeed going to be the case for the ABCD reciprocal, maybe not from here. We're going to present those arguments in our room. You guys are already aware of the levels that we are tracking. And those levels, right? If we indeed end printing the major ABCD reciprocal, which, by the way, this is also another plagiarism that was taken from our projections. Right now, you guys may see 6,000 in the cards. Please be aware that these pseudo traders do not understand the market. They take the work from others. But anyways, let's move here accordingly. This is a main projection also from that period. Because remember, in that period, timing the market, another important quote here from many analysts that get wrong all the time. Going back here into the projection, okay? The projection from, this is a main projection, okay? That was a descending broadening formation, by the way, a continuation structure implying momentum resumption of the prevailing trend that has been upward from A to B equals CD, an extension, a reciprocal move from a geometrical figure, okay? And where are we now? If you guys can present yesterday, as is yesterday within our room, if someone can find someone, some of the members can find someone who were projecting the same arguments, being bullish at the lows, projecting this 6,000 region, please do your own research, okay? And find someone with similar projection from 2022, okay? Even early 2023, I would take that as a consideration. Because now we are heading towards a projection that aligns with the periods of risk also within the Fed funds stopping the rate, or they're stopping hiking the rate, which, by the way, oftentimes that leads into major turbulences, major declines within the price action, which are aligning as of now with our readings. Another brief interpretation here, we can move here very briefly into the 2-year yield also, just to portray that each time the Fed start cutting rates, this oftentimes result into major declines, okay? Let's observe here, do a very simple analysis here with the readings. Once again, most of our work here is on the fly, so apologize the messiness in between. The first rate cut, or the last one, only applying these recent data, from 1995, we have all those peaks basically coinciding with rate cuts, and the peaks on the 2-year yield also. 2007, also before the major crash, correct? The last one that we observed recently was here on 2019, before COVID crash, correct? Before the long period of zero rate, okay? And now, are we declining from here? Was this the peak last time, 5.50? We are going to see, my friends, but everything is aligning with our readings. The market bottom was indeed identified back in September of 2022, nearly the end of September, October, and now we're working on that cycle high. And we are closely tracking, closely monitoring all the new variables within the price action on the S&P 500, okay? So we are getting close to our projections. In 2025 and 2026 will be indeed a very interesting period also, as we are approaching the elections in November of this year. Now, to finalize the stream here also, to portray only our projections on gold, there are similarities between the price action and Bitcoin that we're going to be discussing within the room also, that the previous projection also, you guys are familiar with this pattern, a very popular one of the conventional patterns here, the cap with handle, one of Richard Schumacher patterns from the 1930s. And where is gold now? You guys know that the measure move of this chart oftentimes leads to where? To the projection of that, the height of the cap. And if we go to the current information, once again, where is gold? Achieving pretty much that measure move of the structure within the 2500 region, which, by the way, were also calling that gold was going to crash to 1500 and 1200. What happened next? Another proof that our reading has been respected. Therefore, gold, indeed, another chart proving us that our readings repeat over and over, not because we are right, okay? I want to make that clear. Not because I am right, not because we are right, but rather because the data points from the legends of the past continues to repeat over and over and over. This was a research already done 100 years ago, and all we have been doing is respecting them with an unbiased approach in order to try to execute positions accordingly. By the way, none of these, again, represent financial advice, or rather an interpretation of technical information. Now, to finalize the stream, another comment on BTC. Where is Bitcoin heading towards now? There are similarities between this pattern on gold and Bitcoin, where we are going to navigate those same levels, similar conditions. This is not the bottom. Some of them were saying 15,000. What happened after? Nearly 340% move. Okay, so please be careful who you listen to. Do your own due diligence when it comes to interpretation of the market information. And I would strongly recommend Trading in the Zone by Mark Douglas to start first, understanding our psychology. And when anybody's pretending to know anything, please double check your sources. Make sure you are listening to someone who is actually reliable. Everyone, this is Marble6. Thank you for being here. This was only mainly a test on the stream on X that I'm going to try to do this also often, at least once or twice a week. We're going to be working on that too. It's also another way for us to get our voices out there and present true arguments, once again, respecting the technicals from the legends of the past. Everyone, appreciate each one of you for being here. And remember to live a life with an attitude of gratitude. Have a nice weekend, everyone. Cheers.